Hey everyone. Of course, Cathie Wood is one of the more popular investment managers today, and it's understandable that investors are interested in the stocks that Cathie Wood is buying. But I want to say two things about Cathie Wood before we get into this analysis of the stock that she's buying here. First, I think Cathie Wood got too much credit for the success of her stock picking during the earlier stages of the pandemic when her innovative growth stock portfolio was soaring. But at the same time, now that her ARK ETF portfolios are down significantly from those highs, I think Cathie Wood is taking too much heat because those stocks are not performing well. So both ways, I think she got too much credit when things were going really well and too much heat when things are going poorly. I think investors make the mistake sometimes of giving credit and placing blame on stock pickers based on the strategy that they're implementing. When you're implementing an innovative growth stock portfolio, this strategy performs well when interest rates are very, very low, like they were in the earlier stages of the pandemic, close to 0%. When interest rates move higher, these types of portfolios get punished. So placing blame on Cathie Wood, I think, is misplaced. And giving credit, I also think, is misplaced or too much credit, right? And so I just wanted to get that out right away before we get into the analysis of the particular stock that we're going to talk about in this video.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, and the one stock that Cathie Wood is loading up on lately is Shopify. Recently, she's purchased three different big purchases of Shopify stock in increasing quantities. A 15,000 share purchase first on May 14th, and then a 20,000 share purchase again on May 14th, and then a 68,000 share purchase again on May 14th. So three different purchases of large quantities of Shopify stock for Cathie Wood on May 14th. Does that mean that you should buy Shopify stock? Well, let's take a deeper look at Shopify. Now, I had Shopify stock rated as a buy for some time until 2022 when it really invested aggressively in logistics. And one of the ways it invested, this was now the second acquisition at this point that I'm highlighting here. It acquired a startup deliverer for $2.1 billion. This was after it paid like $500 million for another acquisition in 2019 in the logistics space. Part of the reason I liked Shopify stock before these acquisitions and before these expansions into logistics was the asset light business model. I didn't want Shopify getting into logistics and fulfillment. That's a low margin business with large capital investment requirements, as evidenced by what you see from Amazon. Okay. And so I didn't want Shopify going into that business. Amazon, one of the more successful businesses in that category, even though it's been extremely successful with that business, its profit margins in that segment are still less than 5% operating profit margin in the e-commerce online business with combining logistics included in there. So if that's the upside, like that's what one of the best businesses in that category is performing, and it's going to require billions and billions and billions of investment, I don't want to be invested in a company that's going in that category. I didn't like that strategic decision. And I highlight, you could go, I don't think I was on YouTube yet around May of 2022. In fact, I wasn't. I didn't start my channel until I believe September of 2022. At this time, I was still writing articles for the Motley Fool and I was covering Shopify stock. And this is when I took Shopify off my list of stock to buy. I downgraded it because of this decision. I said I didn't want to get into this business because it's now moving in this direction. I don't like it. I don't want to be involved in it. And then not too much long after, less than 1 year later, on May 4th, Shopify finally admitted that it made a mistake and it sold off this business. So in less than a year, it sold this business, including Deliverer, a company that it acquired for 2.1 billion in less than 1 year ago, to Flexport in an all-stock exchange for 13% stake in the company. So it didn't get cash back, it got stock in this company that it sold it to. So it didn't really divest away from this business. It's still exposed to this business because it owns an equity stake in the company. So it's still going to be exposed to the ups and downs of this industry with the billions of investment that's required. But instead of it being on its income statement, it's going to be on its balance sheet. It's going to be on its balance sheet. And let me show you where. So now when you look at Shopify's income statement, as I have pulled up here, so all the way up down until here, until its total operating expenses, that's the business that it's involved in now. So what's going to happen with the logistics business will not show up here. It won't show up from revenues all the way down to total operating expenses. So you won't see any of the numbers here. Where you'll see it is below operating expenses. In these line items specifically, in other expense, where you saw negative 342 million, and then in other comprehensive income, or comprehensive income here, negative 281 million. Because the assets have moved away from its property and equipment and operating lease and intangible assets. So this is where it used to be. Now it's in the form of equity and other investment and equity method investment, which it now has roughly $4 billion invested in this category. So it has more here than it does in its own long-term assets. And so what you'll notice from quarter to quarter is this value will be changing. It will need to continuously update every quarter the value of these equity investments. And the value of those equity investments are what it received in exchange for the sale. It's the stock, it's the shares of this company. And another thing I want to share with you, it got a 13% stake in the company. So remember, it bought it for 2.1 billion and it got 13% stake. Okay, so it got 13% stake in a company that was last valued at 8 billion in February of 2022. In February of 2022. Now, while this might be dated information, the value of growth stocks in general has moved lower since February of 2022. That was before interest rates increased exponentially. So Shopify basically paid 2.1 billion for that business, and then it sold it for a stake in a company. Let's say 13% is worth, let's say $1 billion. Let's round it up. So it took more than $1 billion hit on the purchase and sale of that company. And in the investments in logistics overall, it lost a great deal of money. Now, I don't like that decision. I didn't like that decision. The company was moving in the right direction. You'll notice here the operating profit margin for the last decade. It was moving upward and it had reached almost 12% before it made that ill-advised investment, and that just threw the business in a tailspin. Operating margin collapsed. Now it's recovering, but now it has that equity method investment in that other company that's going to move it up and down, and I'm just not a fan of that decision. And then to sell it for equity instead of selling it for cash, I was also not a fan of. I'd prefer they sell that side of the business completely and completely divest away from logistics. And finally, the stock is trading at a forward price to earnings of 47.58, which is relatively expensive for a business that has billions invested in the logistics side of the category. So I still don't think Shopify stock is a buy, even though Cathie Wood is loading up on it. I personally don't like it. I think management has a lot of work to do to recover from that ill-advised investment in logistics, and I would like to see them move away more so from the logistics business, and a sale of that segment, all of that equity method investment, would move in the right direction in my opinion, and I would be more interested in Shopify stock after it did that. Or I would want to see Shopify's valuation much lower if I'm going to invest in a company with billions in the logistics side of the business. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.